Hi friends, Shringar House of Mangalsutra has announced its June 2025 quarterly results, their first earnings report after the IPO, and the company has delivered a steady performance in its core business of Mangalsutra manufacturing and trading. Let's break down the numbers and see how this newly listed company has started its journey on the markets. In the June quarter, Shringar reported revenue of about 332.6 crores. A year ago, in the same quarter, the revenue was around 271 crores. That's a growth of nearly 23% year-on-year. Compared to previous quarter, when revenue stood at 351 crores, there is a small dip of about 5%, which is normal for a jewelry business because sales usually fluctuate with seasonal demand. Still, the company has managed to grow solidly compared to last year. Now, let's look at profit. The company reported a net profit of 28.5 crores this quarter compared to 15.2 crores last quarter. That is an 87% jump in profits quarter on quarter, a strong improvement. Even though profits were slightly lower than March 2025 61 crores, this quarter's results show good stability and consistent margins. Raw material costs were around 284 crores, which makes up almost 85% of total revenue, typical for jewelry manufacturing. Other expenses stood at 3.8 crores, and employee costs were about 3.4 crores. Despite rising costs, the company managed to maintain profitability because of higher efficiency and better product mix. The operating profit came in at 38.2 crores, showing that the company continues to run with healthy margins. After paying taxes of about 9.7 crores, the company closed the quarter with a net profit of 28.5 crores. This gives a net profit margin of roughly 8.5%, which is quite strong for a jewelry and ornament manufacturer. The company's equity base now stands at 39.5 crores, and this quarter is especially important because it marks the first one after its IPO listing on NSE and BSE in September 2025. The issue consisted of 2.43 crore shares at 165 rupees per share, raising substantial funds for growth and working capital. The earnings per share for this quarter stood at 3.95 rupees compared to 2.40 rupees last year. And Shringar operates in a single business segment, the manufacturing and trading of Mangalsutras and jewelry. The demand for traditional ornaments in India continues to stay strong, and with more organized retail expansion, the company could see steady growth in upcoming quarters. With the fresh capital from its IPO, Shringar now has a stronger balance sheet to expand its manufacturing capacity, improve inventory cycles, and possibly enter new product lines or markets. The company's challenge will be to maintain profit margins while scaling production and managing gold price volatility. So, overall, Shringar's first quarterly results after listing look promising. Sales up 23%, profits up nearly 87%, and healthy margins maintained. While quarter one shows steady growth, the real test will come in the festive and wedding quarters ahead, where jewelry demands usually peaks. Investors will be watching whether the company can use its IPO funds efficiently and continue to grow both revenue and profitability. This quarter shows a strong start to their listed journey.